can you tell when a red-hot stock has more room to run? Consider the case of XPO Logistics, the rapidly growing provider of transportation and logistics services, with a stock that's been on fire, up nearly 32% since we last spoke to the CEO on July 20th. At the time, it seemed like XPO was finally getting some much-deserved appreciation from Wall Street after its stock had spent over a year kind of lost in the wilderness. Now that judgment seems more true than ever. I like this story because XPO is a consolidator in the fast-growing but fragmented logistics industry. A little over a year ago, the company bought Conway, a trucking firm, for $3 billion. That deal came right after XPO acquired Norbert Dentressangle, the European transportation play, for $3.5 billion in April of 2015. And now it seems like these transactions are paying off. We know XPO reported a truly fabulous quarter in early August. Deutsche Bank called it a dream quarter. And I put that in quotes. And it sent the stock surging 14% in a single session. Then when the company reported again last Wednesday, XPO shot the lights out for the second time in a row. The company delivered a juicy 4-cent earnings beat off a 37-cent basis. And even though its revenues came in a tad light, albeit still up 57% for the year, the guidance was fantastic. XPO raised its full-year free cash flow forecast for 2016. And management also made some very bullish comments for 2017 and 18. Stock jumped from 32 to 34 in the news. Today, it surged over 36 as part of a market-wide rally. Can XPO keep climbing? Let's take a closer look with Bradley Jacobs, the chairman and CEO of XPO Logistics. Learn more about how this company's doing, where it's headed. Mr. Jacobs, welcome back to Mad Money. Good to see you, Brad.
Good to see you.
Thank you. Brad, this was an amazing quarter because you've done so much of what you said and then some. You buy Conway, which a lot of people said, like, wow, that is too big. You immediately sell the part that you don't necessarily fit in for $500 million, pay down some debt. But this has made you the second largest less-than-truckload provider in North America, 99% of U.S. zip codes. You really have become the brokerage firm and the delivery company that we've all been waiting to have.
Yeah, so that's been the plan. The plan has been to stake out positions in the fastest growing parts of transportation and logistics and be either number one or close to number one.
Now, when we say last mile, which is really something that pervades a lot of your documents, we're really speaking about e-commerce maybe for bigger things, not just for the little ones that fit on the back of a UPS truck.
Exactly. So we're the leader in last mile logistics for heavy goods like appliances, like home electronics, for furniture, for home exercise equipment, and we'll arrange more than 1 million deliveries a month of last mile logistics.
Now, how does it work with this Menlo? You've got this, I guess that was the hidden jewel of Conway? Is that
it was.
How it worked?
Yeah.
And how does that dovetail with what you've got?
So Menlo, which now we rebranded as XPO Logistics,
right.
It was a few things. Number one, it was a contract logistics company, which we've integrated with our existing contract logistics company. It brought some marquee customers.
Okay.
It also had a managed transportation business, which we merged with ours. And it also had a truck brokerage business, which we also integrated with ours.
Now, I know I'm not a political show, but you have a lot of there's a lot of stuff about how great insuring with Mexico is, okay? Mm-hmm. Under one candidate, and under President Trump, it's arguable that Mexican let's say traffic could be disrupted, so to speak. But under Clinton, let's say it's business as usual. This Mexican franchise is gigantic and growing, isn't it?
The Mexico business for us is approaching $1 billion. It's an important franchise to us. It's growing fast. We have multiple avenues of exposure to it in truck brokerage and intermodal and in expedite. And yes, Clinton would be a better candidate for our business than Trump, but if Trump gets elected, we'll find a way.
You'll figure out another way to do it. Now, how is Europe going? I still think you hit Europe at the absolute bottom, is the way I look at it.
Europe's going very well. We're in most of Europe, but we're primarily in 3 countries, France, UK, and Spain. And we have strong positions in both transportation and logistics in those 3 countries. And UK in particular, we have a big e-commerce presence, and that's really booming.
Brexit hurt, you help, doesn't matter.
It didn't really affect what we're doing because we're in e-commerce there and we're also in food and beverage. And Brexit or no Brexit, people eat and drink.
One of the things that struck my wife just came back from Europe. She said that the system of moving large goods, I'm talking about refrigerators and stoves and things that you would get at Costco and somehow XPO might get it to us, isn't developed at all. Is this an opportunity for you?
Absolutely. And one of our big last mile clients here in the United States, IKEA, which happens to be a European company, asked us to come over to Europe and do a pilot project for them, which we have done. It's gone very well, and we're looking to transplant that to other customers in Europe.
So it's true, they're just not that developed, but they still use mom and pop stores that really can't deliver things.
They're more developed in some things, less developed in other things. Last mile, they're less developed.
All right, so give me a sense of where we are in this country, because there's people who tell me that there's a slowdown. We got that great employment number on Friday. Some companies are doing so well. Some companies aren't. You've got the whole panoply. Where the heck are we?
It depends what part of the economy we're talking about. So the industrial economy has been in a funk for almost 2 years now.
Yes, it's really, if you listen to Caterpillars in the comments, it's just bad.
And those are both good customers of ours.
Okay.
But they're not as funky as they were even 6 months ago.
Okay, that's
So there might be
important.
some little improvement from the bottom there. The e-commerce part of the industry, the e-tailing part of the business is booming. And I think this season between now and the end of the year is going to be very, very strong. Now, one thing about our company is our growth plan has lots of company-specific initiatives that are independent of the macro. For example, procurement opportunities to take out costs by consolidating 10,000 vendors down to 2,000 vendors.
Well, I'll tell you, you guys are in the sweet spot. You've done everything that you've promised. I mean, you sat here, you've promised certain things. They were very hard to do, and you delivered above and beyond what you said you would do. That's Brad Jacobs, CEO of XPO Logistics, an incredibly successful firm. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.